So I'm gonna break down this whole trade. I'm gonna go over the context and everything, the entry process. And in the Discord, I was saying Pumpfun rejecting of the 786. I'm gonna explain what it is later. I want price going into the demand, going higher, break structure, and target range low. And then I had a update in the compound private Discord. Links in the bio, by the way, for live updates like this. Pumpfun looking very good, and with a break of structure right there, which is obviously the entry if you watch my videos a lot. So the entry process was pretty easy, but I'm gonna explain the whole trade. I'm gonna delete everything and going over the context first, because that is maybe the most important thing. So let's see, what is Pumpfun doing here? Pumpfun is in a big range. So this is the range you're in. And this is one big cyber spy section since October 10th. And this is the volume profile in the upper section. And right there, when you go into the more local price section, you can see when you follow swing structure, you make lower highs, lower lows. And this was the lower high, and this was the lower low. So what do you do when you draw your fib level from the high, swing high to swing low? You can see that those are your Fibonacci levels. So these are the rejection POIs. So when you have a move down, you can expect a rejection POI at that 618, for example, and then price to go down. And you can find supply areas to back that up. So that is what I'm gonna do. First, I'm gonna see if there is a supply area like that. And you can see there was a very nice supply area right there, which it rejected from that 618. But let's first go back in time as well and trade it like a real trade. So now we're going back in time. And you can see a very nice supply area above us because it is a structure supply area. You have structure going like this, making higher highs, higher lows right there. And right there, boom, you went lower, creating an inefficiency. So this is your supply area. And that supply area is backed by your 786. So here's your 786, and that is the supply area. So you have a double confluence of a rejection POI. So this is your rejection POI, backed by the 786. And there you indeed see it rejected from it and recreated a range. And before that, something interesting happened as well, because we now know there can a rejection take place because we're in supply plus that Fibonacci level, and you had price going higher with higher lows, higher highs right there, leaving liquidity behind. And as a bonus, this was weekend liquidity. So what do you see here? It's Thursday here, so it was not weekend yet, but here Friday night, here begins that weekend liquidity. So you have a lot of weekend liquidity all the way until there. So this below it is all liquidity. So if we can expect a lower move, you could potentially expect to take this all out. So that price can slice through that liquidity. So right there you can see a high there, and you can see some exhaustion building up. And right there you form a range. And if you grab your high time frame structure, you have a low there, you have a higher low, and a higher high, and a higher low. So what do we see? We see a range from high to low because we're in an uptrend. And that is the range I'm gonna use for my potential short. So you can see right there we have a deviation of the range. And a deviation is your tap 2. So we have right now our tap 1 and our tap 2. The tap 1 came perfectly into that most refined supply POI 786. And there's your tap 2. So now I'm gonna watch for potential tap 3 POI. And your tap 3 POI is gonna be extreme supply or extreme liquidity formed after the tap 2. And you can see your first move up is always extreme liquidity. So let's see what our first move up is. Here you have two candles going higher, so that is gonna be your extreme liquidity. But where is the inefficiency above? That's right there. So I'm gonna draw it there, even though there's no structure, because you want to fill inefficiencies. That's the main goal. And above us, there's very nice 3-minute last bullish candle creating that inefficiency for our tab 3 POI for a model 2. Because a model 1 is if you deviate that tab 2, and a model 2 is that you grab extreme liquidity, extreme supply to go lower. So we are gonna watch that, and we have some demand below us as well. This is the demand, and now we're gonna watch for preferably to mitigate that demand and go higher into that extreme supply, extreme liquidity, and go lower, or of course go higher from a model 1, which is even better because a model 1 is always better than a model 2. And you can see here we are going lower into that demand, and these are also the screenshots I was sending in the Compound private Discord. That link is in the bio, and I was sending those screenshots because I want price coming into that demand, then go higher, because that is good for the return to zone. So right now we have mitigated that demand, which means we have an amazing return to zone. Why is this now a better return to zone? Because there's no demand backing it up anymore. That is already mitigated. So you have a low here, a low there, lows there, lows there, all higher lows. None is taking out the other lows. So that's amazing, amazing return to zone. But we do have a quick move up, and that quick move up creates demand. So we have 2-hour demand creation, which is not good for the return to zone. So the move up was pretty quick. So let's see what happens, and we mitigate that 2-hour demand. So now it's fine again, for the same reasons I was explaining to you. And we are taking our time, which is very good for the volume profile, because as you can see, the volume profile is now in the upper section of the range instead of the lower section of the range, which means that there is a range inefficiency. So when price goes lower, it will probably slice through because of that range inefficiency. And you can see market makers fitting their short positions there to go lower, or exiting their longs, of course. So right now we are indeed going lower, and you need to make structure between tab 2 and tab 3. So this is tab 2, this is tab 3, and we grab that extreme liquidity, mitigated that extreme supply. So we need to break structure between the tab 2 and tab 3. And you can see structure is going like this. So this is your last higher low. So we need to break this in order to confirm a rotation towards that range low. So right now I'm gonna put my line there, and if we break it, that rotation is confirmed. So let's see if we're breaking it and we're going higher instead. That means we didn't break it, so we're gonna watch for a model 1. If we broke it right there, yes, you would have an entry there, stop goes above the tab 3, and you target the range low for a 2R. But right now, we have a model 1 in place, so we extend our range to our tab 2 to see if we are deviating our tab 2. And right now, the tab 2 is indeed deviated, so we're gonna watch for a break between tab 2 and tab 3 again. So are we gonna break structure right now? And you can see we are going up very nice, leaving a lot of liquidity behind. So these are all low, so the return to zone is even getting better right now. And now we're gonna watch for a break between tab 2 and tab 3, and you can see price making higher lows, higher highs, and this is your last higher low. So break this, and the model is confirmed, unless we make a new high right now. So let's see, and we don't make a new high right now, and there is not your break. That is an SFP. Why is that an SFP? Because we didn't have high time frame closes right there. So we didn't have a 3-minute close below it. It was a wick, a wick, a wick, and price went higher. So you didn't enter right there. Right now, what you have to enter is there. Or a level 2 structure break, because you wicked it, price can go higher, grab the liquidity, go lower, and then this break of structure is it. Because a level 1 structure break is simply when you grab that high and you break structure between tab 2 and tab 3. But a level 2 structure break is as if being that break of structure and then going higher. And there you see, we indeed grabbed that liquidity. And now we have to break structure right there. And let's see if we do it. And their structure is broken. There's your structure break. So your entry is gonna be right there. Stop goes above here. If you want to play it safe, what I did, the stop is going above this high, because it's always more safe to put your stop above a Wyckoff tap. And you can take this with more size, so that is why my stop was above that as well. So you can take this with 2 or 3%. Then the RR is 3.8, but you make almost 10%. So that is what I did. And your stop goes above it, your structure is broken, and your trade is confirmed. So now we're gonna watch for our range low. So the target of this trade is gonna be the range low, and the inflation of this trade is gonna be the Wyckoff tap. So right now, when we press play, you can indeed see price went lower and went to the target, and even went way lower. As I said, context building, that the final target of this trade is right there. And fully de-risked, fully a very nice take profit is taken, and just one of the one of the cleanest trades in January, maybe the cleanest trade. So I hope everyone took it. This was more textbook than this you're not gonna get. In the POI, breaking structure, range and efficiency, leaving liquidity, everyone was just top notch. So see you in the next video, guys. Join the Discord, link is in the bio for live updates, and ciao ciao.